Holy shit, I'm so sorry, guys. I was like just balls deep in DD right now. I'm trying to get the book 3 out by the end of today, and I totally lost track of time. Relax, Trash Dan. Is that the MOASS hat? No, it's this is like a bad luck hat. No one likes this one. How deep into the DD? Um, let's see. Uh, about yay deep. First time streaming. Don't worry, you'll get the hang of it. Thanks, .UK. Sneak peeks. Yeah. I'm pretty excited, yeah. But the DD is long and a lot. So I'm trying to get it done by the end of today so that it's out before we hit this first T+2 exposure window. My birthday weekend, it's been spent writing DD. It's been exciting. I don't know how rewarding it will be, but it's been fun. My birthday was interesting. I don't think I ever had that many people simultaneously know it was my birthday, so that was interesting. Long and girthy. It is both. It is both. It is both lengthy and girthy. Maybe this is finally a reason for someone to say height, implying that it is both tall and wide. You still got that B-Day positive vibe and energy going. Love seeing the smile on you, Gherk. Happy Sunday. I get very excited while writing DD. I tend to get all my tit jacking done and during the process. This is usually hidden from you guys. Um, but like that's when my tits are peak jocked. And then, by Monday market open, I'm calm again. And so you guys have caught me right in the middle of it. All right, let me try to catch up on some of this. Nesquik, afternoon Gherk, $1 million question. What happened Friday and how does it bode for Monday? Think they'll short it? They could. We'll discuss that in a little bit, Nesquik, but yeah, possible. So good news, bad news. I've tested positive for COVID and I'm a prisoner in my bedroom. Good news, that means I can stare at the chart all week. As long as you don't die. Don't die, a user. Um, Technicals look really good for a continued run. Yep. I do think they could try to bring the price down on Monday. Um, RC wants us to buy at strike 741. Thoughts? This won't make my 510 play great. 741's not a strike, so I wouldn't be too concerned with that. There's some 740s, but they're on the wrong dates. Uh, there's a good possibility Ryan Cohen has no fucking idea about any of this. Um, hey, Ecstasy. Hope you're giving people explicit information on how they should sell one contract to cover the cost and exercise the other contract to buy 100 shares. I'm currently in the middle of explaining cashless exercise. And then I will explain other strategies like 2-for-1 or 4-for-1 afterwards. But yeah, I plan to outline strategies to exercise contracts. Can you vlog your DT writing? I'd rather die than be a vlogger. Um, Although maybe I'm already there. I don't know. Can you talk to us about Theta Decay and IV change from Friday to Monday? Uh, Theta should drop off pretty hard Monday next week, especially on 11/26 weeklies. There's a holiday and a half day next week, and that Theta loss will be realized on Monday. So those contracts, those 11/26s, will be cheaper to buy into on Monday. Maybe not a lot cheaper. A lot of them, have moved into the money, but there should be a discount. Happy Sunday, Daddy Pickle. Hope the birthday festivities were great. Can't wait for a fun week. It was fun. It was exciting. Um, Mostly because of you guys. You guys, thank you all so much for the generosity and the outpouring of support. It meant a lot. Hello, Weeb Revolution, New Long Johnson. You will hear my thoughts on next week. I did get some rest. I finally have my new bed, and I slept in it. I slept in it big, like more than I've slept in years. I think I slept 6 hours straight. I didn't wake up once. Ivy's still high ish. Well, it's still low compared to what it can hit. Anything you're especially excited about right now? MOASS, mostly. The potential for a short squeeze on GME being higher now than it has ever been, and what the rest of this cycle represents. Would it be better to, will that heavy theta loss be realized at market open on Monday or not till later in the day? Market open um, should be realized right away as soon as options pricing comes in from CBOE. So you're saying FOMOing into a weekly 250 2 minutes before market close wasn't a genius move? No, but the potential for it to run into the money by Wednesday is still there, right? Our floor is much higher. We'll get into that in a little bit. You missed the mods getting wasted. I know. You guys kept reaching out to me, but I was, first of all, extraordinarily tired, right? I just published book 2 that morning, and so I hadn't slept basically at all until the stream start. Um, and then yeah, I was already, all caffeinated up and working on book 3 by that night. Are you gonna YOLO the birthday donations on tons of 11/26 510s? I would never buy an 11/26 510, literally ever. There's not enough time for the price to reach that level. And even if there was, it would be cut short by the Friday expiry, right? Like I hold the contract into past Thanksgiving into the half day. It's just a terrible call. So yeah, I wouldn't buy any of those, even if the price had the potential to hit that level, which it likely doesn't. I would still want to own them later, right? Like for that far out of the money, I wouldn't buy anything like that until at least Feb, maybe later expiration. Would you supply an additional? Okay, hold on. I'm trying to catch up. There's a lot. Don't forget to tag me if you guys have a question. Do you still think 225 to 250 range is what you consider safe, or have you moved that up? Obviously, if the floor comes up, the potential for the run up goes up in proportion. So, I was thinking 225, 250 from a $20 or a $200 price point. We're trading at 230 going into Monday. If we can maintain that level or stay above 225, then 250, 275 is in the cards as conservative price points. Are you planning on selling your Feb calls 23rd, 24th run and rebuy afterwards, or hold them through till MOASS? It depends on the price point we hit. Um, I will likely hold them and average them down. So by when they become cheap again, like if I start to go red on them between now and February, I will just simply buy more calls for February or April. I'm thinking about buying some Aprils as well, depending on how many additional profits I have. I'm up a lot already just from Friday on most of those calls, as I'm sure many of you are as well. Um, so yeah, I'll just be looking to average those down. They're not going to lose value quickly, um, but I will attempt to increase my leverage on that day as much as I can. Do you think there's a possibility of IV crush this upcoming Monday? Maybe a little. It depends. If they short the open and drive the price down, we can see some IV crush, which would be awesome, right? Because that just gives people another opportunity to get in. So 420s, no, I don't like those either. I snagged 250 weeklies before close also, but I have plenty of dry powder to buy more. Nice. What's exercise options? It said the exercise options need satisfaction from shares out of the inventory. Might it be the MMs put some shares into their inventory on Friday to somehow hedge for the next week? KL, you've just described a delta hedging. That's exactly what they should be doing. The problem is they don't do it to the extent that they should, right? They're not hedging the delta 100%. We know this. As they have exposure. Their gamma exposure would be limited if they were hedging appropriately. Um, and so, yeah, I mean, you're literally describing the effect by which they should be hedging, but it's likely that they are not, and will still experience gamma exposure either way. Also, driving the price up on one side just increases the potential on the other. So by driving all those ETF quarterlies and GME monthlies further into the money last Friday, then now they have a chance of seeing even more exposure going into next week. How common is it for stocks to have cyclical pricing? Hold on, I missed a bunch. Do you think we could possibly have MOASS sooner than expected? It's possible, yeah. MOASS can occur at any time during this. All we need is for the price to hit a level at which a margin call occurs. Um, so that's one of the other reasons that I have these long dated calls and I don't want to sell them, is because on these runs, I want to have them there in case a short squeeze triggers or a gamma squeeze begins. Um, can you go into what strikes you're looking to pick up next week? Thanks. Yeah, I'm looking right now. I think I'm looking between around 250 to 300. Um, Maybe some 350s for the volatility. I still have 200s, 220s, 250s, and a few 280s, and about half of my January 950s that I bought for this run. Those January 950s were just bought for the IV spike. So I only sold off a little bit of what I bought into on Friday. Yeah, I bought January 900s. Um, how common is it for stocks to have cyclical price action? Is this something we should get in the habit of researching when buying a stock? This obvious of cyclical price action, I don't know if I've ever seen before. There are things that go up seasonally. If you were watching the stream a little while back, there was like Party City, which kind of runs a little bit before Halloween every year. Like there's stocks that do have like predictive cyclical price action. Um, it doesn't always come to fruition. Obviously, changes in the marketplace can affect that. This is a little different than that, though, right? That's just anticipation of a stock doing well during a particular time of the year. This is strictly driven by market mechanics. This is simply the exposure on the position playing out every fiscal quarter for the last 5 fiscal quarters. And so this isn't quite the same as, seasonal cyclical action. This is driven by real unavoidable mechanics, which is a lot different, right? If like Halloween falls in the middle of a global pandemic, like no one's really going to be like, oh, Party City is going to kill it this year, right? Um, we got a 510, so happy that wasn't a bad call. Nice. Is the highest strike still 300 that you'd buy? No, I'll probably look at 350s. For the rest of, I still have, let's see, I have 4,800 and so I have like 6,700 still in contracts, like of my original capital. Um, and I have like 4,000 something in WeBull and another like 5,000 in IBKR that I'm going to be using towards weeklies this week. So a little over 1/3 is still tied up in weeklies, and the other 2/3 I still have yet to invest. So it's about 30% is what I kept in. I traded some options on stream on Friday, and I'll be turning those profits back in also. Theta Decay plus a big short equals paper hands. I think they're hoping so. I forgot to tag you. I think it was wise to buy 1126s at market open tomorrow and then look to average down during the day. Agree. Possible. Um, that might not be the worst strategy if you get the opportunity to average them down. But yeah, I think we'll see a significant price decrease anyway. Um, if they do run it, it's not going to be hard on Monday. More than likely, they won't run it hard Monday. They could. The potential is there, though. So, as we know, they're operating within this very narrow window. There's not a lot they can do to avoid the call pressure. The biggest thing they can do is tank the price and try to get people to sell out of weeklies before they cover. Hence, reducing their hedge and their exposure. Hey Gherk, new Dillionaire, what to you is a realistic price range for a run up? I think we could test near 280. If we can fill the gap, 300 is possible. We'll have to be still trading pretty significant volume above 250 there for that to happen. I still have Januaries and Februaries to buy this week. I'm not super priced out of them. Like they're up, but it's fine. And I laid down enough of a position on Friday in January and February that I'm not super concerned. I already had some from before that. Just 3.5 day trading week historically have high volatility? Most likely. It's not something I've looked into before, but yeah, I would say it does. You snagging more Jan Febs this week, or are we going to see if they roll? I answered that. What if, with us finishing $20 over max paying 30, um, $30. I lost the question. Oh, we finished $30 over max pay mustard, homie. Wouldn't T+2 be significant this week going into the ETF exposure? Absolutely. Also, ETFs that contain GME were up as well. If we take a look at XRT, XRT way the fuck up this quarter, like significantly. So we could expect to see that play out as well. $300 a good strike or too far out of the money? I think it's fine, but remember, it's more likely a volatility play. What indications do we have that they are not hedging appropriately? The amount of gamma exposure they have, trash Dan, their gamma exposure shouldn't be as exacerbated as it is. If they were hedging true, there should be none, right? If they were truly delta gamma neutral, there should be no exposure, right? Because any contracts exercised, they should have the shares to cover. But I mean, they never are true to delta neutral, right? There's always an advantage for them and arbitrage for them to profit off of by hedging more favorably one way or the other. With GameStop, there's no liquidity. So the action of hedging drives the price up. Right. If there was a lot of liquidity, you know, they could hedge slowly over time and it would be like it wouldn't be noticeable. But with all the illiquidity on GameStop, if they were hedging, you know, millions of shares to, you know, cover in the money contracts, we would you know, see that play out because there's no shares. So we would see significant price increases running into Fridays every Friday, right? And this was the only Friday that we've seen some price increase, and it was minimal at best, and most likely the hedging of contracts being bought. What about the Dorito of Doom? It's just terrible technical analysis. But yeah, at some point after a long enough period of consolidation, things are likely to break one way or another. See you later, Carl. Thanks for hanging out, man. If you're not a fan of paying for Theta, why buy April calls? I think they might be cheaper now than they'll ever be again. But I'm still thinking about that. Gherk, would they let us run like last Friday? Why not short it down even a little? Maybe they couldn't. We don't know how exposed they are. They've been internalizing this position for an entire year now, Harry C. So like letting us run on Friday like that may not have been, you know, something they allowed to happen, but something they couldn't prevent, right? We know for a fact they don't want the price of the stock going up. That's inverse to a short position. So something to consider. One second. Sorry. It's looking better for the checkbook to grab 270s on Monday, then 250s Tuesday, then 230s on Wednesday. If it's flat all week, is there a counter argument to that? No. That's fine. If we haven't run already, I mean, obviously, like, you know, grabbing this far out of the monies first means that, you know, you may not be able to ever grab the in the monies, especially if the price goes up. Would you prematurely exercise in the money February calls if we go above a certain price during the next two runs, or hold as backup for January? Oh, I'd start exercising. Yeah, absolutely. If I could start exercising, I mean, I'm going to save a bunch to exercise if I really think there's a squeeze, but I'll start exercising a few here and there. I missed my entry on Friday. Does it make sense to buy in at market open just to ensure I don't get further priced out if they don't crush the price on Monday? See, market open's tricky. It's volatile. You should always wait a little bit after market open, unless you want to try to play that volatility before buying into anything. Um, it's risky. You know, it could spike at market open and then drop $20 and then run on Tuesday, right? And that would really fuck you. Be patient. There'll be an entry. If it continues to run slowly up, you know, you can just enter. You might lose a little bit of money, but you might not lose as much as you would by trying to play that like market open volatility. Why does it cost them 3x to exercise with synthetics? Just joined. Okay, so the 3x thing. So first they have to create a synthetic out of an ETF, right? So they're paying the cost of the share to create a synthetic. Then they're taking that basket of synthetics and they're going over and they're satisfying call contracts. Now there's a time period between when they get that basket of shares and when they satisfy the contract, right? So already the price of GameStop could have continued to run and there's arbitrage there. So if they then have to go settle GameStop at a higher value, they're going to have the loss from the call contract as well, on top of the share borrowed from the ETF, on top of whatever gamma exposure or delta exposure they had to hedge. And so you have it essentially triples their losses by trying to satisfy with a synthetic share. And then they have to return that synthetic, right? After they've given that synthetic away, they then have to return the full value of that synthetic back to the ETF at market price. So yeah, it seriously compounds their losses if they attempt to do that, which I don't think they would. It's just stupid to try to do that. The shares should already be in inventory is the issue. Why did we run on Friday? Hedging? Buying? FOMO? I don't know. My DD? Pressure. The pressure is increasing. It has been increasing significantly for the last several weeks, the last quarter. We know they failed the previous options contract. If you know, we expect to repeat January cycle, we're right on track. Like we could look here at this. This is from the new DD. It's not out yet, but this is January's price cycle. So, you know, right here, Wednesday, they ran it the hardest, falling in and failing the rest of the cycle. Then we started to run again in December. FTDs propping the price up initially, with FTDs becoming more and more dramatic as the time went on, until we reached what was last year's peak on the 29th. If people, you know, buy and hold contracts further out than the full gamut of their exposure, you know, they're going to continue to have to hedge. So instead of the price declining like it did in January, the price would just continue up, likely into these ETF FTD dates. And, you know, even if it went as far out as February's next exposure date, you know, that presents a significantly higher chance of MOASS. I mean, the run up itself, overlaid and scaled still takes us to testing, 8,500 on the peak. I'm pretty sure that should be enough to get some serious margin calls going. Bullish as fuck, by the way. Like, and we're right on track. Like, day by day, our price action is almost exactly the same. So there may be another opportunity to buy here and here. As I said, remember we expected dip in this window and this window. And this is literally January last year's price action overlaid. But really, after this first, if they fail to roll after this first ETF exposure date, GameStop will never, ever, ever be cheap again. Unless people cash settle all their contracts here, in which case the price will drop one more time. But even after that price drop, we're looking at a floor of like 700. Oh man, I'm way behind on this. Sorry. What's with the 3 million ETF shares just popping up on Saturday on the GME website? Don't know. Could be shares being returned to the ETF. Shares of GameStop. It's also more likely that the ETFs that settle end of day, some ETFs settle every day, have weighted GME higher. I mean, GameStop's current market cap now 17.5 billion versus its market cap last like Friday, which was the Friday before last, which was like 14 billion. So 3 billion in market cap gained in a week. It's pretty significant. So more than likely now weighted higher. So as the price climbs, here's a fun fact: ETFs have to weight GME more strongly, which means they have to buy more GameStop. So the higher the price of GameStop goes, the more ETFs have to purchase it. And they will also be left finding themselves without the liquidity to satisfy those purchases. There's a reason I said that this squeezes from every side. Yeah, you can just watch the IV indicator. You can just watch the profit. IV as it plays out, it's pretty obvious. Do you know of a way to calculate the possible price of an option before we get there? Like calculating for Monday at a 240 strike. I don't know if option strat will factor in the theta decay, but November 26, 240. Currently up. They're like $1,000 right now. I don't think these are calculating the IV drop yet, or the theta decay yet. Maybe not. There might be a calculator that lets you do that. I'm not sure. Side note, is this most well rested and sober I've seen you? You okay, bro? I'm always sober. How often do you do a member stream? This is great stuff. Every Sunday, generally. The only one I've missed was when I was moving. Friday ETF and GME expiry in May and August before big runs were also plus 4 or 5% days. Yeah. It would make sense for them to tank the price tomorrow to shake people out, but I have a feeling they're going to run in pre-market and cover everything, being scared of people buying low. It's possible. That's another strategy. Did you receive any valuable input by apes or a valid counter argument to your theory? I haven't seen any yet. Most of it's just bullshit FUD. Like, um, nobody has $20,000 to exercise a contract without any understanding of how contracts work. Um, a lot of it's like, this is how you lose money. This is not the way. Buy, hold, DRS, MOASS is inevitable. That seems to be the main like theories, and those, in my opinion, are just either uh, misinformed individuals, or they're just spreading dissent, as internet trolls are wont to do. If you can set a limit sell for options, and if it goes into the money, if yes, would it sell at the current bid price? Would you recommend this as an option this week? Can you set a limit sell for options if it goes into the money? No, a limit sell has to be placed below, at or below the current trading price. I guess you could set it for above, and if it like an upward stop. Is that what you're saying? I'm confused by what you mean. You want to set a limit above the ask? You can do that. Expected volume the next 3 days? Not a lot. Um, maybe as much as August, maybe a little more. So, somewhere in the next like 3 days, I expect to see probably between like 10 and 15 million volume. If there's no volume, the price goes up, right? So people are buying options now, which then catalyzes the price movement. Whereas before, people were just holding. You can see a distinct drop off in holding versus, um, like, you can see a distinct drop off between GameStop's upward volatility and range, and when options became bad. When people stopped buying options on GameStop, our upwards volatility dropped off significantly. People are buying them again. That catalyzes movement. The longs can counteract it if they want to. If the Fed is pumping trillions into BlackRock iShares ETF, why can't they exercise synthetics? Okay, that's not how that works. They have to borrow the synthetic, right, which creates a debit. Then they're using the synthetic that they borrowed from one person. It's like trying to use one credit card to pay off two other credit cards that both have more value than the first credit card. So, like, say you have a Amex with a $5,000 limit, and you have a Visa with a $5,000 limit, and you're trying to use your MasterCard with a $3,000 limit to pay both of those off simultaneously. Will you start your stream earlier tomorrow to cover pre-market? If it gets crazy, yeah. 90% of the people on Super shouldn't play options because of ignorance and lack of options knowledge, to be fair, 90% of you guys shouldn't be playing options because of ignorance and lack of market knowledge or options knowledge. But that's not going to stop people. Yeah, you can set conditional limit sells on Fidelity. I think Trade Armor lets you do that. How big of a deal is that weekly MACD crossed the upside? Pretty big deal. I guess it's just trailing. Oscillators don't predict the future. We can't triple stamp a double stamp. When people ask questions, they're just seems like holding literally holds the floor of options, keeps the pressure on the high end. Yes. Squeeze. Options keeping the pressure here, holding the floor, keeping the pressure here. And gamma exposure making it blow through the roof. That's what creates the gamma squeeze, right? And then a gamma squeeze leads to a short squeeze. That sign can't stop me because I can't read. How dare you? I only lost a little bit of my capital on options. So how did you lose money on options last week? How dare you? I dared. Someone Supersonic said if I buy options, my woo would fall off and run away. Is this true or just FUD? It's only true if you don't exercise them. Do you see tomorrow's lowest potential entry for Jan Feb C's for the remainder of the cycle? No, because we were looking out here. I covered this earlier. Hold on. There we go. So if we look out here, we'll have other entries probably here if they fail. If they don't, definitely here. Those will be the other two entry opportunities that I see in all of this. There could be some IV drop here as well. The price will be significantly higher, but there could be some IV drop. There may be an opportunity here as well, but I think if they fail to roll, like if they roll, the price is going to go like that. But if they fail to roll, then the IV and price will drop off probably back to our current level before it starts taking off into January into those increased FTDs. Can you guys see that okay? Try to make these charts clear. I need to talk with the guy who did the indicator and see if he can help me I'll make that white so it's easier to see. Is that easier to see? Maybe if I put this in the background. There. That's a little better. If you give Houston away an update, I watched a stream recently where he was talking about waking up late on Friday and missing the buy opportunity. Oh boy. Is holding DRSing options linear more pressure on short hedge funds, or is it more exponential? I mean, the more liquidity you pull from the market through holding DRSing, the more difficult it is for them to hedge. So I would say that the pressure is exponential. It will only it increases by the rate at which they have to hedge. I bought a Lucid $50 put instead of a call. ETF exposure has to be covered by end of day on Wednesday. Maybe I should release this stream to the public after we're done. Please inform the masses that it is neither a triangle nor a Dorito. We have voted for a new name. Okay. Would you like them to fail or roll this cycle? I don't care. Both are good. I don't think they'll roll because a roll means MOASS sooner. And the more time they can buy, the better, right? So a roll seems disadvantageous. Do it. All right. The whole thing's a clip. It's only 2 hours. It's probably not even. Have you heard from Trade Spotting? No. Why? Why would they drop the price on Monday with all the GEX from options on Friday? Okay, they don't have to cover exposure on Monday, KO. That's why. And that's how. They have until Wednesday at market open. So they have a window. They would drop it in order to get people to paper hand. If people cash settle their options and panic sell out, that reduces the amount of hedging they have to do while they cover their gamma exposure. Could ETF exposure order be placed Wednesday morning and show on Friday if dark pooled? No. I support it to be released today. Okay. Today's stream is highly informative in the short term, and watching it next week is mostly useless. I agree. Would you cover Monday's expected up-down action? It can go either way. There's no way for me to predict when they're going to cover, right? And trying to is just a waste of all of our times. Like they'll either try to tank the price and get people to cash settle out of options and reduce the amount of hedging they have to do, or they will run it at market open hard. Did you talk to Computer to find out why he was so jacked Friday night? I don't know. Probably made millions of dollars on Friday. I'm sure a lot of people did. So today is the best buy opportunity other than that Wednesday morning. Yeah, I mean, Friday at that breakout was a pretty good fucking buy opportunity too, which I tried to highlight, but many may have missed. What's the difference between T+3 and T+6 for APs? Is T+6 just for FTDs? Yes. T+3 and T+6 are both only for FTDs in regards to active authorized participants. So that +3, +6, +35 window for ETF FTDs, that's totally separate from the gamma exposure. So all of these cycles are separate. You have gamma exposure, you have FTDs, and you have futures. All three of them affect one another, but they are three separate things individually. What's 2.8 again? 2.3 and 2.8 are ETF exposure dates. Do puts help short hedge funds? I mean, if they can hedge to the opposite side and remain delta neutral, it's beneficial for them. This is Visceral's dog, Jameson. I heard what you said about not letting me have access to my dad's account. I follow Moonwind religiously and have a solid grasp on CCs. Also, Visceral for mod. I feel like this chart is the core of your pending DD. Looking forward to it since when I take screenshots now, I have your hat stuck in it. Can they fail to cover gamma exposure on T+3 at all? Not that they have before. I mean, but then they blow up. If they fail to cover, they blow up and you get MOASS. What's up, H-Deck? I guess this isn't really needed to be pointed out right now. These are just expiration dates for options. I was pointing out that January 21st options were not the way, as January leaps were not last year. Yeah, possibly. Maybe the midpoint after the roll date, possibly the post earnings short is where I'm thinking would be a good opportunity to buy in more longer term dated options. Um, like if nothing big is announced at earnings, we can expect them to short it pretty hard. And that could lead to, a significant drop in the price the following day. If we have low capital on reserve, how high would the price need to run to execute a reasonable cashless exercise? I mean, if you have like a 3 or a 400, so 300, IV is going to affect this, but relatively you'd want to hit $600, $400 call, you'd want to hit 8, 500, you'd want to hit 1,000. If IV spikes really hard, this can be achieved before the price hits these targets. Right, which is simply the value of the contract. Long before, but relatively like just based on intrinsic value alone. I mean, like that's the strike you would want to see in order to exercise 100 shares for zero cost. But I mean, if you have a 300 and it hits 450, you can exercise for 50 shares, right? You get half. Um, if you have a 300 and it hits what, quarter of that would be like one. It's like, what, yeah, that's fine. What's the chance of MOASS kicking off before February 2022? 80%? High. I don't know. I'm not doing a probability analysis on it. I mean, based on our previous data points, which are, these cycles play out 5 out of 5 times, then, and we only have one data point for January. So 100% probability. But, it's not enough data points, right? Yeah, 375. 375 would get you what, 25 shares? Do you talk about do you think all the increase in margin for all these brokers is to prevent retail from exercising calls? It could be. Will your book 3 talk about different exercise strategies, or can you talk about it another Sunday stream? It will. I will cover a few. Um, if contracts 2x in price, would you think it would be better to exercise them or roll them further? Roll them further because you want the exposure. I think the pressure comes from rolling them further and not just exercising them, because by rolling them further, they have to continue hedging them as the price continues up, um, which puts more pressure on them, right? And so you can by even by exercising now too early, um, you know, you relieve some of that pressure. The liquidity has to run dry, which is most likely to happen when the price target, like the price has reached much higher levels. See you later, man. Brokers being adverse to cashless exercise in periods of high volatility, especially if you don't have the cash on hand. Yeah, they might be. And that's why I proposed, that 2-for-1 strategy where you have two contracts, you sell one, exercise the other. Yeah, that's another option. Fidelity has exercise and sell to cover. You have to speak with someone on the options desk. Contacting their customer service via like chat or even in person will not yield you the results of the answer you were looking for. It is specific, it is odd, and it is not well known by their customer service agents who are not brokers. They might be educated a little bit financially, but they're not, their customer service reps are absolutely not experts in the services they offer. I'm behind on stream and catching up. When you answered how to calculate the options, you go to the website but didn't share your screen. Can you show us how to figure out option price via that website? You can't calculate. I just checked to see if I could calculate the theta decay from Monday into it, and it doesn't calculate it yet. So is 350C 1126 the farthest out strike you will buy for a volatility play? Yeah. So exercise should be saved for the final nail during MOASS. Yes. Ideally. I mean, obviously, like, I can't tell people when to exercise, but if we're squeezing, that's the best time to exercise. Theoretically, what price level can GME be at by the end of January if we repeat last year's movements? If we repeat them exactly, I think I showed everyone this already. If we repeat them exactly, we end up at a floor around 725. So everyone FOMOs into short term weeklies. No one holds their contracts. Everyone cash settles at the peak. Then we'll see the price drop, right? And we'll see the price drop probably to a much higher floor, but which means that the actual floor after the February run up will probably be around that level, which is like $1,500, $1,600. If August price action repeated, new floor would short-term 12.3, 12.10 be advantageous in addition to weeklies for increased leverage if held. Sell weeklies and shorts mostly at IV peak, not at all. What? Hold on. So basically, the thought is that rolling into sufficiently near the money, likely to be deep in the money, Feb calls, is as secure as exercising now, but also keeps up the pressure. Yes. It maintains the looming threat of exercise, which forces them to continue to hedge. If August price action repeated, new floor, would short term 12.3 to 12.10 be advantageous in addition to weeklies for increased leverage if held? Potentially, if you're trying to get the most out of this run, but I don't think enough people are going to be on board with that. People are going to buy the cheapest options available to them, right? You have to remember that. Like, the odds of retail acting in concert, especially on something like this, are slim to none. And so, no, you'll just be the guy holding 12 threes after everyone's sold out of their 11 26s. I don't see any advantage there. The only advantage I see possibly between here and December calls outside of weeklies is December 17th. Um, just in case, obviously this line right here, this white line. Oh wait, that's is that way off? Or can you guys not see that line? Can you see that? I don't know why that's not displaying on the image capture. There's a white line there. Maybe if I make it bigger. Oh, I can't. Okay. Well, anyway, there's a white line there for December 1st. If the price action continues up after December 1st, then December 17th calls will be very advantageous. If it doesn't, if they fail, these will become worthless very quickly. So I'm not a huge fan of those either. I might buy a couple just to hedge against a roll, but it's unlikely. You see the white line? Okay. Maybe it's just like I can't see it on OBS. You still think that $1,000 price would trigger MOASS? I think so, yeah. I think that should be sufficient enough to start seriously affecting any shorts. Like that should be enough to start knocking over the dominoes, essentially. If they have to cover GEX by market open Wednesday, then what would be a possible driver of price action Wednesday after GEX is potentially covered? Well, this is what led to the futures, right? We know that when they roll, price action and volume pick up after the gamma exposure window ends, indicating that they are going to roll the contracts, whatever futures contracts they're holding. If the price drops off and volume drops off, then they are going to fail. That whole period from December 1st through December 9th is tricky because we don't know what they're going to do. And we don't know how many days they need to cover that. It's a very unsure period of price action for GameStop. Can you explain what happens to the shares and profits when you execute versus sell your contract? What else could potentially be owned if you execute? What? You either get 100 shares or you can cash settle the contract for the profits. That's You get 100 shares at market value, whatever IV value that is priced into the contract, you lose by exercising. But you get 100 individual shares, and the value from that is that if a squeeze does happen, you do not have to sell 100 shares in a block. A lot of people have XX shares, and selling 100 shares just at once is not very beneficial to them. So, the idea is that you can then move your position around more equitably and sell at better strikes because you can sell off smaller portions of it at a time, or you sell at better price targets. Also, you force the market maker to go find you shares, which could exponentially increase the value of those underlying shares beyond the value of what the contract ever could have been. Especially if that exercising causes MOASS, which, as I see it, it likely could. Yep. So if they fail to roll, this is exactly what we're looking at, pretty much. Except the key difference being that if the brunt of the options interest is out here instead of here, then the price continues up as opposed to falling off. So even though an exact repeat of January make the floor $700, it's more likely for that run up just to be MOASS. Yes. So would it be better to sell Friday options Monday and buy in Tuesday, or just hold till Wednesday? Sell Friday options. I mean, probably Friday weeklies bought for 11.26 mostly should have been sold Friday. If you carried them through the weekend, then be prepared to maybe have to diamond hand them through a dramatic drop Monday. What would be the worst case scenario for your hypothesis in the coming months? People follow greed, trade weeklies, get burned out on options in this whole choppy period leading up to the big run. And by the time we get here, there's not enough gamma exposure to sustain a squeeze. I think that would be the worst case scenario. But, you know, it's in retail's hands. I don't give a shit. I'm up on my GameStop position significantly. Whether it squeezes or not, I've made a lot of money, more than I ever would have made on any other stock in the same period of time. So I can't force people to do it. I simply am presenting the opportunity for it to happen. If people misread it or misconstrue it, it's going to breed negativity and FUD. There's nothing I could do about that, right? I think you missed my earlier question. You can share how you knew that the last 220 attempt would break through, even though the volume was getting lower and lower. Was it TA pattern probability? Are you talking about when I called the breakout of the wedge on Friday? There was just like a wedge. I may have deleted it, but there was like a wedge here. I think it went like that. And then on, you know, the 15-minute time frame or something, we broke out of it like right here. If you go to the 5-minute, it might be easier to see. But this was the wedge here. So when we crossed 213, that was like the breakout signal. And then, I just followed like the fast EMA, and the price action continued up. Do you put trailing stop loss orders on Jan Feb options? No, I didn't. I don't use trailing stops, Dr. K. Thank you. I don't want to get my shit called away unexpectedly on some volatility spike. Gherk, thank you so fucking much for allowing us to pick your brain all these days. Yeah, man. Thank you, dude. I appreciate that, Eddie. Will cycles continue after January, or do you think that will be it? No, I expect them to continue if they're able to survive January, which it doesn't look like they could currently, but, things can happen, right? The market is a volatile and unpredictable environment. What do you think the likelihood the price goes down to 180 during the chop? Slim. Maybe, but slim. Hey, Gherk, could you take a look at PayPal? It looks like it's falling off a cliff and has cheap put options next week. Sure. Oh, that's not it. There's like a $10, like a $4 to $10 range that it could drop to in the coming days. It looks like there's been a massive amount of sell-off recently. I'm not sure what's generating that negative sentiment, but there's still some range to the downside. It doesn't look great. I hate catching the tail end of it. Like, you probably would have wanted to have been in here after the fail at 230. Or here at the fail at 216. But yeah, I guess you could chase it. It could turn around unexpectedly. They still have a almost $220 billion market cap. How much volume and options being exercised do you think they would need to put pressure on the short hedge funds. Literally every single fucking one puts a ton of pressure on them. They're stuck between raising the price of the stock significantly enough to free 100 shares of liquidity, or 3xing their loss on the contract by borrowing synthetics from an ETF. So every single exercise option puts unbelievable pressure on them. And exercised in mass, they could never keep up with the losses. It would be it would just blow up their margin so quickly. You have to understand that this is much like the inverse of the short position. These are naked calls. They also carry infinite loss, and at 100 times the rate of a share. So, you know, a $1 bump in the stock price means a $1 loss on a share sold short. A $1 bump in stock price on a naked call means $100 lost. There's no comparison. I mean, well, there is, but there's, how do I phrase this better? There is no other means of leverage which exposes their margin this much available to the public. Question from a sub $25,000 equity poor. Enabled margin, trying to get on level 3 on Fidelity. Didn't realize that I could day trade without PDT on a cash account as long as I use settled funds. Yes, you can. You can trade stock settle T+2. That's how long it takes the funds to settle. It takes a little bit more managing, but you do get to avoid the pattern day trader rules. Yeah, a cash account is, and options settle in T+1. So they settle by the next trading day. So whatever options you trade one day will be settled by the next day, open and close. So if you open an option and close it on a Monday, on Tuesday, those funds will be settled and ready to trade again. So yes, a cash account is better if you are sub $25,000 in equity. Yeah. I just looked up cashless exercise options, and it states that something available to employees of brokerages that they're allowed to borrow the money to exercise. You don't need to borrow the money to exercise. They can. I mean, okay. First of all, you could just sell the contract and buy shares, right? It's the same effect no matter how you do it. It removes shares from the marketplace. And it leverages capital because of the growth that is going to occur over the next several stages of this cycle. Whatever capital you put in now comes, like, basically every option, long option on GameStop dated past January 25th will go into the money at some point in the next 3 months significantly. And what that does is it acts as a multiplier on the capital available to retail currently, and allows them to create the pressure needed to squeeze the shorts. You know, $2,000 into an April contract now can mean 69 or 61 dollars in gains in 3 months. So, you know, this is how you create leverage. This is how you grow capital and make money. She knows I follow you and knows about MOASS. You stated you were delayed as you were deep in DD. She looked at me and seriously asked if you meant Dungeons and Dragons. She's not a blonde. She just doesn't follow. Thank you, Yeti. No, due diligence. Yeti's girlfriend, wife. when you day priced out, that's referring to the poor's not being able to afford options. Or when I say priced out, yes. So capital deployed now has the chance to grow. Capital deployed later may not be able to afford the cost of entry. That's the point I'm making. Is that long dated option contracts now are at a price where most people can still afford them. In 2 months, that may not be the case. So from now through potentially December 22nd, there are opportunities to enter GameStop long term, which present massive potential value. So, maybe you only have $2,000 of capital right now, and you don't have a lot of money, but you can multiply that capital and leverage that capital against the short hedge funds by tenfold come January. You could do it with one contract. You can do it with weeklies and trying to play the cycle. It's risky, very. But there's advantageous opportunities everywhere in this. And I'm just trying to tell people about them. Or highlight them as I see them. Is it better to buy Feb 18th this week or wait for a dip or IV crush in the upcoming 8 weeks? That's up to you. It may not happen. If they fail, we can see a dip. If they don't, and I still don't know because the fail or roll is a coin flip. No, there's an advantage to dropping the price on Monday. Absolutely. Retail are historically not good at trading. I think the options sentiment that has flown around Superstock for the last 3 months should tell you that. They're not going to hold their options through that dip. They're going to panic sell them when they lose a ton of value, when they go negative, because options are expensive and probably cost them a lot of money. So yeah, dropping the price gets people to cash settle options, which means they have less to hedge when they do cover their gamma exposure. By having a massive amount of call OI open on 11/26 when they go in to cover their gamma exposure, that creates significantly more upside volatility. 25K in equity includes holdings and cash. Yeah, I'm gonna unlock it immediately. No, if you switch back to a cash account, you don't have any margin positions, if you have margin positions, you can't immediately switch back. But if you have no open margin, you can switch back immediately to cash, and you won't suffer any PDT violations. A cash account is impervious to pattern day trader violations, as far as I know. You can check with other people in the chat. I've not run into pattern day trader violations before, so my knowledge of them is not extensive. But I'm pretty sure that a cash account is impervious to that effect. If it was expecting MOASS prices in January, would it be better to buy higher out of the money Feb calls to increase leverage above 500, or stick with strikes lower than that in the context of exercising? It possibly doesn't matter, Mohadala. But currently the cap on Feb is 510. So if you have more than 25K in Fidelity, what type of account should you have? I mean, I prefer cash. I don't really like using margin. I have a couple margin, really just one margin account now. And I barely ever use it. Margin also presents leverage, but it's riskier. You're borrowing their money. They can decide when they want it back. That's what you saw happening a lot with Robinhood back last January, as people had margin accounts, and you get your stuff pulled away from underneath you. as they want their money back. If T+2 covered GEX by market open Wednesday, then what would be a possible driver of price action Wednesday after GEX is potentially covered? So from Wednesday through the 1st, we will see gamma exposure from 1126s play out. So Friday, probably not a lot, but the following T+2 window, whatever 1126 contracts were, exercised on the massive price increase, we'll see the gamma exposure from that play out. And that's why we're looking beyond that gamma exposure window. So from December 1st, which is the last day of that window, onward to determine whether they are rolling or not. I think I answered that for you already, AL, but there it is a second time. So I plan on buying immediately on Monday, no matter what. I've been here since January, so if I see it go down, I'm not selling. I'll just buy more. That's the retail way. Now we use options. Cash account isn't impervious. I think it's 5 trades in a day for a pattern day trader. You can't get pattern day trader on a cash account. You can only get good faith violations. If I have some 220s and 225 weeklies, should I be trying to sell Monday morning or ride the dip? Asking because they are currently in the money. I mean, you have a lot more flexibility if they're in the money. I mean, you're not super deep in the money, but you're a little bit in the money. They can change margin requirements anytime. Yep. Why do you use multiple brokers, and what is your favorite? Diversification of my position. If MOASS happens and one broker is down, I can use another. My favorite brokerages are probably Fidelity and Vanguard for long-term holding, and IBKR and WeBull for options. Schwab's okay. I've never used TDA, so I can't comment on it. Does 1126 OI look like people bought weeklies already or are waiting? It's up. Looks like people are buying. They'll buy more. FOMO doesn't slow down. We just closed a Friday $30 above max pain. It's going to have an effect. Again, wondering if people bet on monthly's exposure 1119 without accounting for T+2. Oh, I'm sure weekly exposure went way up. But it doesn't matter because it's on these exposure dates. The FOMO from retail isn't what really drives the price action, because we have these ETF quarterlies and GME monthlies expiring. That's institutional investment that is going to exercise and continue to hold those ETF and GME shares, and that's where the brunt of the gamma exposure comes from. So even if people did FOMO into 0 DTEs on Friday and absolutely kill it, there's still going to be a ton of gamma exposure in this T+2 cycle. In general, what percentage of your total portfolio, not just GME, is shares purchased outright versus shares obtained from contracts? Shit. I've probably bought. Let me see if I can just do the math in my head real quick. Maybe 12% of my shares outright, at market or limit. The rest of all come from exercising in the money contracts. No problem, man. I'm sorry I just got here and you may have answered this already. Are you expecting them to start covering Wednesday or at end of week? I expect them to cover within the T+2 window, which is Monday through Wednesday market open. Now that's deceptive because if block orders are placed in a dark pool, that means it could be until Wednesday afternoon. And so really what you're looking at is Monday open through Wednesday close. That's essentially the time period they have to cover because of the flexibility they can afford themselves. We could see a massive ramp be built. It's possible. The Shift website showed a lot of call volume. We'll watch more Monday, Tuesday, but I have a feeling people are going to pile into options. If 250 goes in the money, the hedging will be significant. Yes, open interest at 250 is currently very high. 3,000 contracts already. There's also, contracts out here at 250 in January, another 1,500 December, another 1,000 Feb, another 300 January 23, another 200. I mean, yeah, there's a decent amount of open interest. Not as much as there could be, obviously. I mean, you guys have seen open interest on a strike, and stocks like Nvidia hit 10, 20,000 contracts open. I don't like a straddle play. It seems shitty. Um, if you see the trading view chart, it was really easy to understand and well labeled. Helps you visualize the upcoming price versus upcoming dates. Well, yeah, because it all runs in the same pattern. Um, Either one, spicy yogurt. I mean, if GameStop runs up this much, then everything will have liquidity. Can you explain the benefit of them just running starting at Monday open? Yeah, prices people out, so they can't, since the gamma ramp for next Friday is low. Um, you know, by pricing people out early, it prevents them from FOMOing in. Are we able to see options pricing at pre-market? No. What time do you expect to drop part 3? I need to prepare my bath. Let's see. After the stream, I have a couple things I have to do, and then I'm gonna come home and finish it. So hopefully before like 9 p.m. tonight, which may be late for some of you. I'm sorry, but I'll try to have it completed by then. I only have like one last section that I'm working on, and it should be done. Anything else? Can I DM you the option calc I found that lets you change the date to expiry? See if you think it's at all accurate. Do you care? You can if you want to. I don't mind. Should I start pinging the SS mods in advance? I don't know. I saw what the one guy posted on book 2, and I feel like he should unpin it because it's blatantly false, but I can't really control that, I guess. Nor do I want to. I never wanted to be a mod or have any power over there because look what happened with fucking Warden and his bullshit. What odds do you have us for halt anytime next week? We could see a halt. It might be our first halt in a long time. I still think the volume is not going to be excessive. I think we're just seeing the volume against the liquidity, which makes it far more pronounced. The thing is, against the illiquidity. Sorry. The thing is, one of the days is a half day, so not sure if that calculator will work. Yeah, I'm not. That's what's kind of tricky. I know. There's other options calculators that let you set the date you start the contract, um, and try to price for that. But I think they also fail on factoring in that half day of theta. Um, Most of the comments in that comment were calling that mod a shill. I didn't read that deep. Um, but yeah, I mean, it's impossible for you to collude over a public forum legally, because obviously every person has their own choice or can make their own choice. I'm simply just my intention has always just been to outline this um and present it to people so they understand. Um I think I think the rest of it I don't really need to explain. Like I don't need to tell people what strikes and what dates. They should be obvious to the people that understand how to play options. Um do they have until Thursday at open to cover ETF Gex? No. Gamma exposure is T+2 no matter what. You're thinking of T+3, which only factors into the FTDs, which has nothing to do with this. This week is gamma exposure. It is not part of the FTD cycle. There could be FTDs that play out throughout the week, but none of the serious spikes we expect from a failure to roll the futures contracts. I mean, if you have limited capital, the January 21st 950s are lower risk. MOASS, if they're the same price, the January 950s are lower risk. But harder, like they slip faster, so you have to watch them much more closely because they won't likely go into the money, right? And so it's just a volatility play, so you have to be on top of watching your position if you have 950s. Could a huge ramp this week trigger MOASS with Gex next week? Wondering about a Monday run. Could a huge ramp this week trigger MOASS with Gex next week? Unlikely. Um, we'd have to really push the upper limits of the price action. Like we'd have to test 350 before I could consider the gamma exposure from the following week causing MOASS. That we still need to trade volume above 300 before we can really take off. Which I think is presented well here in this chart that we've been looking at. Is that this period here really sees us trading a lot of volume above 300. Like we're kind of at 300, 350 through all this. Um, but this really sees us trading a lot of volume at those price points. If we maintain January's price action, obviously they can't short as hard as they used to. So I expect we could even maintain higher price action than this represents, right? This is from a different day and age, essentially, on GameStop. I mean, back then when this price action occurred, there were millions and millions of shares available of GameStop for them to, uh, use to properly hedge and to create liquidity. That's not available to them anymore, and so this whole cycle could be far, far more volatile. Um, when looking at Febs for this week, at the money, I haven't bought a single at the money February contract yet. All of my February contracts are still at 300 and 350. If I bought April's, they would be at like 500. Like I'm not looking at buying any near the money shit that far out. Um, in terms of volume, there are numbers 35 million being thrown around. I don't think it'll be that high. That seems excessive. August was 10 million. I wouldn't expect us to be more than like 50 or 100% of that increase. So will the prices of options on Monday be similar to what it would be Tuesday because of the holiday, or the prices remain the same regardless? And the theta will decay between Monday and Tuesday, and whatever happens with the price action. When's T+69? I have to ask JFresh, but yeah, that's the price suppression FTDs. I don't have those factored into this, but they are a part of what goes on behind the scenes. Though MOASS can happen at any time. Do you feel it would be most fortuitous for it to happen in January, given the trifecta of rocks and hard places, ensuring the maximum pressure on short hedge funds then? I think that's just the point at which it happens. There's no, I'm not going to mince words. Like this presents the maximum exposure to the positions we know are inverse to ours. Um, so shorts, the market makers that write the naked long calls, the authorized participants that provide the synthetic shares. This is when they are most exposed. This is when MOASS is most likely to occur. Any other cycle, MOASS is less likely to occur statistically. There would have to be some other driver of the price action. And since nothing else has driven the price action in the last 5 quarters but the cycle that I have defined, I do not see another opportunity. I think if we finish the January cycle at a very, very high price point and run into the ETF exposure in February, that can also trigger it, but that's still this triggering it, right? Um, and that would occur, like one day after the end of this dip. What happens if they roll? The price goes up sooner, much higher, much sooner. Um, but they'll have more time to drop it between the next time it goes up, after December. So they won't have a lot of time between the roll and December 22nd, at which the price will go up more, but they'll have a decent chunk of time between December 22nd and the next ETF exposure date, because they won't have as many FTDs across these dates and here. Um, but if they fail to roll, obviously all of these dates in this window represent FTD exposure. So essentially, if they roll, the price goes up into the roll date, um, stagnates, and then up again here, and then stagnates, probably dropping until it goes up again here. The fail, as you can see, plays out, but they both catch up to each other at the same point. They just trade at different price levels until that point. I guess the advantage of the roll would be they would price retail out of shares. And the advantage of the fail is that they buy themselves more time. I don't think they want to price themselves out of the shares. So I don't think the roll is advantageous for them. Happy late birthday, Gherk. Thank you for answering our smooth questions. You got it, Johnny A. Thank you so much. Enjoy a coffee and bagel on me. All I ask is if you play an old Pigeon Whale tune and say, oh yeah, like the Kool-Aid Man. The old Pigeon Whale tune. This one? Oh yeah. Is that what you were looking for, Johnny? I hope that did it for you. A 6 million volume could put us at 140 though, right? Put us up like $140. Yeah. The upside potential is massive. August had 14.5 million volume on Tuesday alone. Wednesday was 12.8. Was it? I don't think it was that high. Maybe I'm misremembering. Why isn't it showing me volume? Do I have volume turned off? Okay. So no more than 50% of that. So I would say I wouldn't expect volume higher than like 36. I have no idea if there's any if there is any NFT news. There's no predicting what the effect would be. Do we have 2 dislikes on a members only stream? I have no idea. How do you make that volume estimate? By the reduction in volume over the previous cycles from March to January to June to August. So theoretically, we could like based on that, right? There's more illiquidity, less volume to be traded. This cycle should represent less volume than August. But I wouldn't expect it to exceed August's volume by a significant amount. It's gone down by about half every cycle. But the price action goes higher, right? So more increase in price on less volume because of the bid ask spread. Do you think you'll know in the Monday PM whether they plan on covering early or dumping the price? Maybe. If the pre-market's pretty flat, I would say that there's a better chance they're gonna dump it. If pre-market runs super fucking hard, then there's a pretty good chance they won't. But I mean, then you're just asking me to like, it's just an assumption, right? Like neither of those may necessarily be true. Like that's not something I can really predict. I just liked when you shot down my rags to riches overnight story with a 510C. Is it possible 1126 strikes will be added tomorrow? Yeah, it is. I'm on a 12 Pro Max and I see dislikes. Okay, I have them turned on, so. Thank you, Trash Dan. I appreciate your continued dislikes of the stream. All right, it's 2:30. I got to get back to the DD, guys. Thank you all so much for hanging out and tuning in, and for all the support on my birthday. It was overwhelming to say the least. Thank you all. I really appreciate it. I will see you guys bright and early tomorrow morning, probably around 9 a.m. Thank you all. Have a good night. not an advisor. Frigulon.